What's up everybody? Nate here. So in the United States, money and personal finance is always on Americans' minds. From budgeting to saving up for things like gas, Americans are always thinking about money because everything in our economy costs something. But lately, Americans have been struggling a lot more when it comes to their finances. And over the last 2 years, the cost of living and the cost of just about everything else in our economy has steadily gone up. In a recent poll from CNBC, 1 out of every 5 workers runs out of money before their next payday. And if Americans have a lot less money and the cost of things start going up, well, then our entire economy has a problem. Our economy runs on spending, and with fewer and fewer Americans able to buy things, our economy is going to take a hit. So today I want to talk all about our economy and why Americans aren't able to afford pretty much anything right now. We'll also discuss what is coming next for the United States economy and what exactly can be done about this money issue in the United States. But before I get into all of that, do me a quick favor and hit, smash, or destroy that thumbs up button below and ring that notification bell too. Both of those 2 things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now let's talk all about Americans and why they're running out of money before payday every single week. Okay, so it's no secret that the cost of living is going up in the United States. In fact, on the recent Consumer Price Index for February 2022, it showed that the average cost of goods and services went up by around 7.9%. Now that's a pretty big issue when you talk about the entire scale of everything that Americans buy. If something costs $1 today, that means a year from now, it's going to cost around $1.07 or $1.08. Typically, the cost of things doesn't go up this quickly, but right now we have raging inflation in our economy, and there's a few different reasons for that. For one, we have money printing. So the Federal Reserve and the United States federal government printed trillions of dollars over the last 2 years, all in an effort to solve the pandemic problem. And we threw more money at the pandemic than we pretty much have at anything else in our country's history, with some estimates saying that over 80% of all of the bills that are currently in circulation were printed over the last 2 years or so. So needless to say, that money printer was on for a very long time. But money printing in itself doesn't really cause an issue. It's what comes after the money printing that we have to worry about. You see, when the United States government prints money, it does so to expand our economy. There's a greater need for it, which means businesses can expand, hire more workers, and so on. It also means, though, that more people are going to have more money, which ultimately leads to more spending. When you have more spending in your economy, businesses have to react because people are buying more things. They can't simply produce all of the same products that they were before because they're running out. So businesses make more, but that comes at a cost. They have to find that money somewhere, and eventually they trickle those costs down to the consumer. That's why prices slightly go up across the board for just about everything, because businesses are making more, they hire more workers, they open more factories, whatever they need to do to make more and get it to you, that all comes at a cost. Consumers end up paying that cost. Now, usually this isn't such a big deal in the United States. Every single year, inflation goes up by around 2 to 3%. Wages and incomes typically go up by around 2 to 3% for workers on average every single year. So even though things cost more, people are making more. So it really all evens out. This is why we stress at the Minority Mindset that you need to invest your money in order to beat inflation. If you don't, then you're really not making any more money, even though your job gave you a raise. I mean, unless that raise was 5, 10, or 15%, you're not really beating inflation at your job. So that's the first reason, and it's something that we can't avoid because all of that money has already been printed and is in circulation. Now, obviously, the Federal Reserve didn't literally physically print trillions of dollars. Sometimes it's just a number in a bank account. But the fact of the matter is, if everybody wanted their money, then the Fed would have to print all of those dollars. And those are dollars that are still available to spend, even though they're not technically physical dollars that are in circulation. And inflation is never going to go away no matter what what the Federal Reserve says, because the Federal Reserve needs to print more money every single year in order to fund bills and expand our economy. So inflation that's around 1 to 3% is likely to continue for the entire country's future. And number two, the reason that inflation and the cost of living has gone up so rapidly over the last couple of years is because of supply chain issues. When the pandemic started, businesses were out of commission for several months. Eventually, they opened back up by the end of 2020, but at that point, it was far too late. They already got way too far behind, and consumers, because of stimulus and all of the money printed by the federal government, were now buying way more things. Everything was in demand, and when everything is in demand, everything suddenly becomes in short supply. Businesses now have to work extra hard in order to meet demand, which means the price of everything goes up even more. And because of the pandemic, things have been open and closed for several months, which has been really hard for companies to keep workers working and produce all of the same things that they were before. In a nutshell, that has led inflation even higher. But lately, inflation has gotten even worse, with some experts saying that inflation could get well over 10% by the end of 2022. Now, if we talk specifically about the cost of living, housing costs have gone way up in the United States. I mean, if you've taken even just a short peek at the housing market over the last 2 years, you've noticed that housing prices themselves have skyrocketed, with some estimates saying they've gone up by around 17 to 20% in just a few short years. That means bigger mortgages, even though you have a super low interest rate, because remember, when the pandemic first started, the Fed dropped its benchmark interest rates all the way down to 0%. But homeowners were not saving any money because housing prices were going through the roof. And because so many people have shifted to a work from home lifestyle, we're using a lot more energy and electricity than we were in the past. People are at home, which means they're using a lot more energy at their homes instead of full office buildings. I will say at the beginning of the pandemic, gas prices were actually going down because nobody was traveling or going to work. However, that all started to change by mid-2021 because the pandemic was slowly starting to disappear and workers were returning to the office. So we saw gas prices continue to spike. However, gas prices by April 2022 have exploded. Some places in the United States saw a 60 to 70 cent jump in gas prices in just about a week. And that has all been fueled, no pun intended, by the Russia-Ukraine war. Russia is one of the biggest suppliers of oil in the world, and the United States and the rest of Europe uses a ton of it every single day. At the beginning parts of that conflict, it was hard to get the oil. And then just a few short weeks after Russia invaded, the United States said they were banning all imports of Russian oil and oil-related products. Now, the United States only uses around 6 to 8% of Russian oil on average. So it's not a huge percentage, but it's still a big enough percentage that gas prices are going to spike throughout the country. The US and other oil-producing nations are starting to make more, but that is a week to month-long process. It's not just a switch that you can turn on and start making more oil. And it's not just oil, it's natural gas from Russia. It's also some precious metals, and it's wheat. Wheat is used in so many different foods and food-related products. And all of those products are going way up because Russia is one of the largest producers of wheat as well. Ukraine creates a lot of wheat too. And you know who else creates a lot of wheat? China. And China is currently undergoing economic lockdowns, which is going to slow their production of wheat and other products. So that's kind of the big picture on why Americans are running out of money before every paycheck every week. So now, what exactly does all this mean? Well, like I said at the beginning of this video, inflation typically isn't a huge issue because every single year you get a 2 to 3% raise at your job. Inflation is usually 2 to 3%, so everything ultimately equals out. But that hasn't really happened over the last 2 years. Inflation is at 7.9%, and wages have gone up a little bit, but they have not equaled anywhere near what inflation is right now. Wages have gone up by around 4 to 5% in the United States, and that's pretty good. But the cost of things is going up even faster. So basically, if your boss didn't give you an 8% raise over the last 2 years, you are losing money. And this is something that Americans can't really plan for because they don't know what the cost of something is going to be month over month. Because the price of everything is going up so rapidly right now, how exactly can you make a solid budget? You really can't. You can only expect things to keep going going up, but your job just isn't paying more. This is part of the reason why we've seen millions of Americans quit their job over the last 2 years. They are searching for something else, and more specifically, they're searching for a job that's going to pay them more. That's a necessity right now, because like I said, if you don't have money, then in our economy, you don't have anything. And it's really tough for Americans who thought they were saving a fortune by getting a house over the last 2 years. Especially at the beginning of the pandemic, housing prices hadn't exploded just yet, and interest rates were super low. So if you got a house right at the beginning of the pandemic, yeah, you may have saved money in the short term. And if you have, say, a 30-year fixed payment, that means your mortgage payment isn't going to change at all over the lifetime of that loan. But that's just your mortgage payment. What a lot of people don't know going into a home is there's also taxes that change every single year, and they typically go up. Because the housing market has been so hot over the last 2 years, even if you saved money initially and your mortgage payment is fixed and won't change, the taxes that you pay on your house every year are going to go up because property values are going way up. That means you could end up paying around $150 to $300 every single year just to live in your house. And that's money that many Americans just don't have right now. And this survey basically points out that Americans are running out of money, and that means that they can't do anything extra with their finances, like invest or save. If Americans aren't able to save anything, then they are one financial disaster away from bankruptcy. I mean, what happens if your car breaks down and it costs a few $1,000s to fix? If you don't have that money, then what are you gonna do? Sure, you could take out a loan or put it on credit, but those are short-term solutions. You have to pay that money back, and you don't have money to begin with. And that's only assuming one bad thing happens. If inflation continues to go up and interest rates continue to go up and you have another financial disaster, well, then what are you gonna do now? So that is a tough situation, and Americans aren't able to beat inflation because they can't invest. They're spending everything they have on necessities. Meaning that once again, Americans' finances are extremely fragile, which is going to hurt businesses and their profits over the long term, because if you're not an essential business, then Americans aren't going to be able to afford your products. You either have to lower your products, which could mean lowering the quality, or just lowering the amount that you sell. That could lead to a shrinking in our economy because businesses aren't expanding as fast as they were before. And all of that points to a recession. Now, I'm not saying we're going into a recession right now, but Americans and our country is right on the verge of a potential collapse. There is a lot of issues right now. So with that being said, what exactly is our country and our businesses doing to kind of solve all of this? Well, right now, the Federal Reserve, who controls a lot of the monetary policies in the United States, has started raising their interest rates. The reason they're doing this is because they want to lower demand in our economy. Remember when the pandemic first started, people were given so much money and then they went out and bought so many different things. Interest rates were low and it was easy to spend money. The Federal Reserve is now pulling back these easy money policies. No more federal stimulus and no more low interest rates. They announced back in March of 2022 that they're raising their benchmark interest rates by 0.25% or 25 basis points. Many experts and investors believe that the Federal Reserve is way behind the curve when it comes to inflation, and they should have done a lot more a long time ago. But this signals that it's going to be harder for people to buy things, and that in itself is a really tricky situation because of our economy. If they raise interest rates way too quickly, then that could lead us into a very quick recession, because now you have millions of Americans whose budgets are already super thin and now they can't afford anything because interest rates are so high. But if you raise rates too slowly, then inflation goes way up and then Americans can't afford anything anyway. So the Fed is doing the only thing that it can and now raising its interest rates. I believe that interest rates are going to be slow and steady over the next few years. They've announced that they want to raise rates 6 more times throughout 2022, 3 times in 2023, and once in 2024. We don't exactly know how high those next hikes will be, but it's all going to depend on what our economy looks like. And of course, businesses could start to pay their workers just a little bit more in order to meet inflation. Now, this might mean that businesses start to shrink a little bit and they can't grow as fast because they don't have as much revenue or profits. I think overall, though, that is one possible solution to get our country back on track. Yes, if more Americans have more money, they will go out and buy more things. But right now, they don't have even close to enough money to meet their essential needs. So businesses can always pay their employees just a little bit more in order to meet inflation. So we might start to see even bigger raises throughout 2022. Because this is an issue for them too, so they can either take smaller profits or they can go out of business because nobody can afford their products. And then lastly, Americans can start investing. Now this is really tough when you're talking paycheck to paycheck, but anything that you are able to invest and anything that you are able to cut out, Americans need to do that now. We don't know what's coming next in our economy, and we certainly don't know what's coming next for our inflation issues. Things could get worse or they could get better, but protecting yourself is something that's always going to remain the same. But the important thing to take away here is do what you can afford now before you can't afford anything later. Because with so many unknowns in our economy right now, you have the choice to do one thing that is definitely known to you: making a solid financial plan. And just starting there is good enough. But now I want to hear from you on this issue. What do you think about every 1 in 5 workers running out of money before their next paycheck? Do you think this is a very short-term problem and it's going to go away as soon as our economy starts to recover? Or do you think this issue is way deeper and way more problematic to our economy right now? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.